Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of spirits, specifically Heritage Distilling Holding Company. It seems like their stock price has taken a bit of a tumble, and the Nasdaq exchange has sent them a little note. But don't worry, we'll break down what this means for the company and its future. It's a bit like getting a warning that you are not keeping up with your grades, and we will see what they are doing to try and improve. This report is a Form 8K, which is basically a snapshot of significant events that a public company needs to tell the Securities and Exchange Commission, or SEC, about. The date to keep in mind here is mid-April of 2025. So the main event is that Heritage Distilling received a notice from Nasdaq. Nasdaq is a stock exchange where companies like Heritage Distilling can have their stock bought and sold. The notice is about not meeting one of Nasdaq's rules for keeping their stock listed on the exchange. Think of it as getting a warning from the school that you're about to get kicked out. The problem is something called the minimum bid price requirement. Essentially, the company's stock price has been below $10 per share for too long, about a month. Nasdaq requires companies to maintain a certain stock price to stay listed. If the price goes too low, it can raise concerns about the company's financial health. Luckily, Heritage Distilling isn't immediately kicked off the exchange. Nasdaq is giving them some time, until mid-October of 2025, to get their stock price back up above $1. This is called a compliance period. During this time, their stock will still be traded on Nasdaq. If at any point during these next few months the stock price closes at or above 1 for at least 10 business days in a row, then everything is good, and Nasdaq will send them a letter saying they are back in compliance. But what if they don't get the stock price back up in time? Well, Nasdaq might give them a second chance, another 6 months, but there are requirements to qualify for that extra time. They would need to meet certain requirements. For example, having a good value of shares that are out there for trading. If they can't fix the problem, Nasdaq will send them another notice saying they are going to be kicked off the exchange. The company can appeal that decision, but there is no guarantee that they will win. The company says they are keeping a close eye on their stock price and are thinking about ways to fix the problem and get back into compliance with Nasdaq's rules. But, and this is important, they can't promise that they will be successful. It's a bit like saying you're going to study harder, but you can't guarantee you'll get an A. This report also includes something called forward-looking statements. These are basically predictions about the future. The company is saying that they believe they are making reasonable guesses, but things could change and the future might look different than they expect. They also point out that you can find more information about the risks they face in their annual report, which is a more detailed look at their financial situation. Finally, the report lists some exhibits, including the interactive data file, which is basically the data from the report in a format that computers can read. Now, what does all of this mean? Well, it seems like Heritage Distilling is facing some challenges with its stock price. Being below $1 per share can make it difficult to attract investors and raise money. It also doesn't look good for the company's image. This situation has a few risks. The first is the risk of being delisted from Nasdaq. If that happens, it would be harder for investors to buy and sell the company's stock. Another is the risk that the company won't be able to raise enough money to grow its business or pay its debts. Finally, there is the risk that the company won't be able to raise enough money to grow its business or pay its debts. Finally, there is the risk that the company's reputation will be damaged. However, it is not all doom and gloom. The company has time to fix the problem and they are working on it. If they can get their stock price back up, they will be fine. They also have the opportunity to appeal if they do get delisted. What can Heritage Distilling do to turn things around? Well, they could try to improve their financial performance. This could mean increasing sales, cutting costs, or both. They could also try to improve their reputation. This could mean improving their customer service, launching new products, or getting involved in the community. The key is to show investors that they are a company worth investing in and show the stock market that they are worth more than just $1 per share. Ultimately, the future of Heritage Distilling depends on their ability to address these challenges and regain the confidence of investors. It's a bit of a tight spot, but with the right moves, they might just be able to pull through. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.